Okay, today I want to go over a common question that I always get. People confuse the words an LLC and an S Corp. They don't know the difference. So I'm going to try to distinguish that with you right now, and hopefully I will succeed. Okay, so what I want to do is show you that an LLC and an S Corp are essentially the same thing. There is a difference between the two. An LLC is a limited liability company. That's the business structure that actually allows you to separate your personal assets from the business assets. So you have some protection in the event that you have a legal case brought against you, then someone is limited to what the assets are in the business, whereas your personal assets are not impacted. An S Corp is a tax distinction that you choose. So it's an LLC that there's an additional step where you normally file the Form 2553 with IRS stating that you want to be taxed as an S corporation. So it is an LLC, but it just has an extra added feature. Now, there is a difference in how things are handled, and I'm going to show you later as to how that's done with numbers, and hopefully I will succeed in that difference. So an LLC, there's advantages to having an LLC versus a sole proprietorship. A sole proprietorship is just like an LLC. They're pretty much the same, except the distinguishment is that you're limited in your exposure of your personal assets, whereas a sole proprietorship is taxed the same way as a limited liability, but you're fully exposed with your personal and your business assets combined as one. So both of those companies, a sole proprietorship and an LLC, both file a Schedule C, and it flows to your 1040. So you're taxed at ordinary tax income rates versus a corporation, which is a totally separate taxable entity that pays its own taxes. So an LLC is simple. You don't have to file it every year. So if your business is not doing anything that year, or maybe you just started and maybe you didn't do any business, then you don't have to file, and that's okay. So it doesn't have an annual requirement. You don't have to pay a salary with an LLC because IRS looks at your income as it's 100% you. So everything that you make, your income less your expenses, and that net income at the end, all of that's taxed to you. It doesn't matter whether you took $1 or you took all of it as your salary. They're looking at the whole thing as your income. So like I said, with an LLC, you do have limited personal exposure because you separated your business from your personal. So you should have separate bank accounts. Your business should have a separate bank account, all activities in that business. The danger in that is a lot of companies, I've seen small ones, they combine the business activities with their personal. And when you do that, you expose yourself. And that's the whole point of having limited liability, is to separate yourself from the business. But if you're combining, commingling funds, then that exposes you, and that negates having an LLC. The other advantage to having an LLC is that you are taxed at an individual tax rate, which is less than being taxed at a C corporation tax rate. An S Corp advantages is just like an LLC is, but you have a requirement to pay a salary, which is payroll. You have to have that. That will also allow you to have more deductions that you can write off that you cannot do with an LLC, with a simple LLC. And so the good thing is anything excess over the salaries that you pay is taxed at the individual tax rate. So you're given a little bit more of an advantage by being able to deduct taxes that you cannot do if you have an LLC. And I'm going to demonstrate that to you in this next example. So here, what I'm trying to show is that the gross profit is 100,000. 100,000 is what I'm basically saying that you made. We're not talking about expenses, okay? We're saying that that's what you made for the year. So we're only covering I'm not covering the whole tax return with you from LLC, just the top part of the income you may have made. So as a limited liability or a sole proprietor, your income's 100 grand. That's all going to be taxed to you. All of that's going to roll to your 1040. But you have to pay self-employment tax, which is 15.3%. And you say, well, what is that? Self-employment tax is Medicare and Social Security. So that whole $15,300 off of this 100,000, that's your tax that much. Okay. Now the difference between just having an LLC and having an S corp is you have the salary component. So say in this example that you pay yourself $40,000. Well, then the business itself is only recording $60,000 in income. So you take 15.3% of the 60 and your taxes are $9,180. That's already a tax savings compared to if you don't have the salaries and you're paying this. And an added bonus is when you get to your salaries, this is your employee, which is you. So you can deduct the employer taxes that you're paying on this 40 grand off of your S Corp income. So it goes down even less. So this 60,000 will have employer taxes you can deduct from that. You cannot do that with a sole proprietorship or an LLC. So I would suggest if your business is netting at least 40 grand, like if you take your income less the expenses you pay and you're making more than 40 grand a year, you may want to consider going to an S Corp because it will save you money, like I tried to show you here, in that you'll have to pay yourself a salary, but you have less taxes. You're not being taxed. The whole 100,000 is not rolling to your 1040. 40,000, you're going to have that as a W-2 on your side of the 1040, and 60 less whatever expenses is going to roll to your 1040, but it's less. And like I said, you can deduct the taxes, whereas you cannot do that here. So it's just something to think about. Just wanted to share that with you. And you can reach me if you like my page. You can get more content like this. You can always get me at lbllc.net. And I'm found on all the other social media platforms. Thank you so much. Have a great day.